Wall Street snaps a three-day losing streak. Stocks rally across the board with the S&P 500 closing at a record high and the Nasdaq seeing its best day of 2024. Asian markets open mixed despite a strong close on Wall Street. The Japanese yen hits a 34-year low, sparking questions over a possible government intervention. The GIFT Nifty is indicating a flat start for the Indian markets. Crude prices remain range-bound with Brent crude trading around $86 a barrel. Gold climbs to over $2,200 an ounce as investors look ahead to key inflation data from the United States. The option of T+0 or same-day settlement will be possible from today in what will be a two-phase rollout. The BSE will begin beta testing same-day settlement across 25 F&O stocks starting with today's trading session. And the Indian government plans to borrow 7.5 lakh crore rupees in the first 6 months of FY25. This amounts to 53% of the full year target. The government also introduces a new dated security with a tenor of over 15 years. Good morning. You're watching Power Breakfast this Thursday morning on CNBC-TV18 in the Mumbai News Centre. I am Hormuz Fatakia. It's Thursday, but it's the last day of this truncated trading week. Let's first take a look at how the Asian markets are trading. It's a slightly mixed start there across the Asia Pacific. It's a negative predominantly. The Japanese index is down over 1%, but the Australian markets have hit a record high this morning. As you can see, the Taiwanese index is down 0.5%. The Hang Seng is flat, but is trading with a negative bias. So it's a red screen across Asia. The GIFT Nifty, as we speak, is indicating a slightly flattish start for our own markets. Remember, we had a very good day for the Nifty yesterday. An implied open is suggesting a 9-point gain for our own markets. It's a flat start, as the GIFT Nifty is pointing out. But the handover from Wall Street was a very positive one, as it was a broad-based rally there, as benchmark indices snapped a 3-day losing streak with the Dow Jones surging over 450 points. The S&P 500 closed at a fresh record high, while the tech-heavy Nasdaq settled around 84 points higher, gaining 0.5%. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Stocks finishing the day higher across the board, snapping a 3-day losing streak. The Dow was the day's best performer, up 477 points, nearly 1.25%, driven by strong gains in Merck after FDA approval of a treatment for a rare lung condition. Meantime, the S&P 500 was up 44, notching a fresh record close, and the tech-heavy Nasdaq gained 84 points. Amazon announcing a $2.75 billion investment in AI startup Anthropic that adds to the online retailer's initial $1.25 billion check, making it the largest outside investment in Amazon's 30-year history. The San Francisco-based Anthropic has widely been considered a front-runner in the AI world. Its foundation model and chatbot Claude competes with OpenAI and ChatGPT. Amazon will maintain a minority stake in the startup and will not hold a board seat. Meantime, Disney reached a settlement Wednesday with the Central Florida Tourism Oversight District. The deal ends almost 2 years of litigation over who controls Walt Disney World's governing district. The battle between the state and Disney started after Disney expressed opposition to Florida's so-called Don't Say Gay law. Under today's settlement, both parties have agreed to drop state lawsuits and to work in cooperation going forward. That's what's happening here in the U.S. Back over to you in Mumbai.
Positive handover there from Wall Street. Let's see how it reflects on our Indian markets. And for that, it's our Power Prep segment. Our research team is joining in with the trade setup and the stocks that are likely to be in focus this morning. First up, Ekta is joining in with all the market cues that we need to watch out for. Morning, Ekta. We recovered most of what we lost on Tuesday and a little more, courtesy of Reliance. But what are the cues that you are picking up this expiry day?
Well, morning, Hormuz. Like you mentioned, the sensex and the Nifty did recover Tuesday's losses, which was led by Reliance Industries as well as HDFC Bank. The mid-caps relatively underperformed, with the mid-cap index seeing a flat close. But FIIs continued to, FIIs actually bought, which was a positive. They bought around 2,170 odd crores. DIIs have continued to put their weight into the markets, and they net bought around 1,197 odd crores. Now for today, it is March expiry. It is a truncated week, like you mentioned. So maybe there would be a lot of closing of positions in the second half of the trading session. In terms of cues, we have a lot of cues to watch out for overnight from the US as well as on Friday. So there will be a lot of cues on the global front, which we will be reacting to come Monday. So we have the US jobless claims, we have the US Q4 GDP on Thursday, and we have the US inflation data, the PCE data, which will be watched quite closely by the markets on Friday. All this will be reacted to on Monday for us, as well as for the US markets, because they are also closed on Friday. Now overnight, the US markets did close higher. Asia largely mixed. Oil is stable between $86 to $87 per barrel, and the GIFT Nifty is indicating maybe a bit of a quiet start. Now just watch out for the macros, because the total gross borrowing also came in, and the first half FY25 borrowing is at around 53% of the share, which is generally lower than what we've seen otherwise. Now experts say for the markets, a move above 22,200 to around 22,300 could probably pull the Nifty to an all-time high. So maybe those are the levels to watch out for. And there could be a reasonable bounce on account of the mid and small caps, which could probably continue, considering that they've gained around 5% from their March 15th lows.
Plenty of cues to watch out for as it is expiry day. Thanks a lot, Ekta, for joining in. Now over to Upasana, who will list out the stocks that we need to watch out for this morning. Morning, Upasana, what do you have for us?
Good morning. First up is Dr. Reddy's. The company signs an exclusive distribution agreement with Sanofi Healthcare India. Next up is Zydus Life. US FDA issues 4 observations for Ahmedabad's SEZ Onco injectable manufacturing plant, and it is important to note that the inspection was held between 18th to 27th of March 2024. Elchem Lab will also remain in focus as US FDA issues 10 observations for the company's manufacturing facility at Baddi, and the inspection was taken place from March 19th to 27th is what the company has stated. Next up is Cyient. Even this stock will remain in focus as company announces a strategic partnership with Dewish Aircraft. Company has said that it will collaborate on the detailed design for manufacturing of D328 Eco-Regional Turboprop aircraft. That's the reason even this stock will remain in focus today. Next up is BHEL. The company has received order worth rupees 4,000 crores from Adani Power, and it is mainly for setting up Raigarh Phase 2 thermal power plant in Chhattisgarh. Next up is Chalet Hotels. The company launches QIP to raise funds, and according to our sources, the QIP size is likely around 1,200 crores and issue price at 775 per share. Next up is IDFC First Bank. According to sources, Cloverdale Investment is likely to sell 2.25% equity via block deal, and offer size is likely at 1,191 crores. Next up is Balmer Lorry. The company to set up a free trade warehousing zone in SEZ of Jawaharlal Nehru Port Authority with an investment of almost 230 crores. And lastly, GSW Energy will also be in focus as the company to consider fundraising via private offerings or QIPs or other methods on 2nd of April 2024.
Interesting names to watch out for this morning. Thanks a lot, Upasana, for joining in. And lastly, Nigel is joining in with the FNO cues on expiry day. Nigel, morning. Reliance and HDFC Bank tried doing all that they could, but they still couldn't take the Nifty past 22,200.
Well, that's right. Late in trade, actually, yesterday, Hormuz, we did have the Nifty Bank that paid out the weekly expiry. So the Nifty Bank actually was underperforming for majority of the trading session. But by the time we wound up, the final hour trade, we did see a bit of a surge. And that's why it performed more or less in line with what the Nifty did. So that's an expiry-related factor. Can the Nifty Bank continue that sort of perform? That's going to be key if the markets need to move up. Let's tell you what the FIs did in the index future side on this expiry day. Well, getting to expiry day, they've added close to around 6 shorts for every 1 long position. So that's the ratio out there. The short position goes to around 69%. And in terms of absolute number, well, that number now had the net short positions from the FIs have moved to around 90,000 odd. So that's a swing factor of close to around 15,000 contracts is what we saw. Moving to the options data now, that's quite interesting. The 22,000 call, that was getting written very, very aggressively in the last few days. Yesterday, those call writers said, it looks like it's a losing battle. Let's pack our bags and move out. So there was unwinding that was seen at 22,000 call, since in fact the markets already had moved past the 22,100 odd mark. But now the bears, they would like to defend higher levels, around 22,200, 22,250. And that's because of the call writing we did see at higher levels. On the put side, though, the bulls believe that they have got this covered at lower levels. Because yesterday, between the 22,100, 22,150 and 22,200 put, there was an addition of close to around 1.4 crore shares. So it's going to be a battle between the bulls as well as the bears. If you want to look at the levels that you're tracking, well, the broad range would be 21,900 on the downside to around 22,250 on the upside. Now, we're closer to the upper end. So in the near-term levels, you'll want the Nifty to get past the 20 DMA and then, in fact, drive on from there. While on the downside, the reference point you have is around the 50 DMA. The Nifty Bank as well is stuck in that range of the 20 as well as the 50 DMA. I will want to see the Nifty Bank actually move towards that 47,000 odd mark and take that out. If that's the case, then that surge that we're talking about on those fresh all-time highs, which is just 300 points away, that will be well and truly on. So let's see how it goes. The final expiry of this fiscal. Let's see whether or not the bulls or the bears can come on top.
The final expiry of FY24. Thanks, Nigel, for joining in. The implied open still suggesting a flat start for our markets. But the other big cue of the day is the beta testing of the T+0 settlement. Remember, the Bombay Stock Exchange has released a list of 25 stocks which will be eligible for this settlement cycle. Under the T+0 cycle, the funds from the sale of shares will be received by the end of the day instead of the current 24-hour cycle. India will become only the second nation after China to have this option if it implements same-day settlements. Yash Jain is joining in with what these changes will imply. Yash, over to you.
We are just hours away from a new milestone for our Indian capital markets. Starting Thursday, that's the 28th of March, Bombay Stock Exchange will introduce T+0 settlement cycle for 25 stocks. The list of stocks which will be tested under the beta version of T+0 settlement cycle can be viewed on your screens. India already has one of the shortest settlement cycles of T+1, and now it's moving towards shortening it further to T+0. As you mentioned, only China has implemented this cycle so far, and the USA, Canada and Mexico plan to move to this cycle sometime in 2024, though the deadline for this particular move is not yet specified. Now, what is T+0 settlement cycle? This means if an individual buys shares, then those shares will get credited to his or her demat account on the same day itself. If the shares are sold, then the funds will get credited to the account on the same day. Under the current T+1 settlement cycle, the transfer of funds or securities happens on the following day after the trade has been executed. This T+0 settlement cycle will be implemented in two phases. Under the phase 1, shares will be settled with an optional T+0 mechanism for trades executed by 1:30 p.m. The settlement of these trades, though, will be done by 4:30 p.m. on the same day. Now, under the phase 2, shares will be settled on a trade-by-trade basis or an instantaneous basis for trades executed until market closing, that is 3:30 p.m. Now, once instantaneous settlement cycle is implemented, the phase 1, that is T+0 settlement mechanism, will be discontinued. Once the initial teething troubles are sorted out, the plan is to expand the scope of this settlement cycle so that the next step will be to move from these 25 stocks to the top 250, rather 500 stocks, and this will be done in groups of 200, 200 and the final one in lot of 100 stocks.
Very important day for our Indian capital markets, as Yash was highlighting. But as we slip into a short break now, let's get you excerpts from veteran emerging markets investor Mark Mobius. And he had this conversation with CNBC's Wilfred Frost on why policy continuity is positive for investors and the areas in the Indian markets that he's bullish on.
Definitely. I think he'll even strengthen his position in the political landscape.
And that's a good thing for investors in the economy?
I think it'll be a very good thing, because basically what Modi has done is digitize the Indian economy. He's moving in the direction of more and more technology. And it's amazing, some of the things they've done, for example, the central bank in digital currency and that sort of thing, has really moved ahead of many of the developed countries. So you've got a situation with a very young population, very dynamic population, many, many differences. I like to call it the United States of India, because the different states are so different from each other, but a rich cultural heritage and just very exciting times for the country.
Is it all about the consumers? Given, as you said, it's a young population, it's a growing working age population, or the tech names, other sectors that you're attracted to?
It's consumers, but more importantly, it's the tech area. As you know, up to now, India has been a leader in software technology. They export software all around the world. Now they're getting into hardware, and I think that's going to be most exciting.
Welcome back to Power Breakfast on CNBC TV18. Now, the government has plans to borrow 7.5 lakh crore rupees from the market for the first half of the new fiscal year. The government has also issued a new 15-year bond and aims to borrow over 1 lakh crore rupees through this bond. Sapna Das now joins us with the details. Sapna, take us through the government's borrowing plan.
So looking at the borrowing program for H1 FY25, it seems as if the government is calibrating its borrowing program, maybe because it wants to save on any kind of an interest cost outgo. So the H1 gross borrowing, market borrowing, has been pegged at around 53% of the full year's aim. The full year's aim, of course, is over 14 lakh crore rupees, and 7.5 lakh crores out of that is going to be borrowed between April and September. So that comes to around roughly 53%. That's one. Second, of course, the announcement of the issuance of a new 15-year bond, and roughly around over 1 lakh odd crore is what the government plans to borrow between April September FY25 through this new issuance, and this has been done based on market feedback. Apart from this, 12,000 odd crores pegged as borrowing via the sovereign green bonds in H1 of FY25, and the WMA limit has been kept at 1.50 lakh crores. Apart from this, the T-bill issuance has also been pegged around 3.21 lakh odd crores. So the sense that we get is the entire thing is very calibrated. Probably the government is trying to save on any kind of an additional interest cost.
And in some other national news developments, ahead of the Lok Sabha elections, the government has announced a 3 to 10% increase in the wages under the Mahatma Gandhi National Rural Employment Guarantee Scheme for FY25. The average wage increase per day is seen at 28 rupees versus a year ago. This implies an average wage rate of 289 rupees for FY25 versus 261 rupees for FY24 per day. Now, the new wage rate will come into effect from the 1st of April. And some other developments now. Indian bonds were not included in the FTSE Emerging Markets Index as per the latest review that the FTSE Russell carried out. And both Indian and South Korean bonds were not included. Now they have been put on hold they'll be remaining in the watch list for at least another 6 months now. And what the FTSE Russell has said, that it has acknowledged the accessibility of the Indian government bond market, but it said that it still does not meet certain criteria for it to be included in the emerging markets index. Now, what are the criteria that it does not meet? The increased regulatory reporting is one, and the tax clearance process is the other. So some of the criteria that FTSE has highlighted there. But remember that despite this being no inclusion in the FTSE index, Indian bonds will already be included in the JP Morgan Emerging Markets Bond Index and in the Bloomberg Emerging Market Bond Index. For the JP Morgan Index, they will be included on the 28th of June of 2024, and for Bloomberg, it will be included on the 31st of January 2025. So potential inflows from the JP Morgan Bond Index inclusion comes up to around, brokerages are estimating anywhere between $30 billion to $40 billion post this inclusion, and for the Bloomberg index they are expecting inflows of around $3 to $4 billion. So we keep an eye out on any reaction to the currency and in the bond markets as well. Well, let's slip into a short break now. Up next, we get you cues from the commodities market. Stay tuned, we'll be right back. Back with us on Power Breakfast here on CNBC TV18, and as promised, Manisha Gupta is joining in with all the updates from the commodity space. Good morning, Manisha. What are you picking up?
Hormuz, hi, morning. I'll start with the crude oil prices, which have edged down on inventory surge. The markets have seen U.S. inventories higher than what they were anticipating, and that has put a pressure on here. And this is even as 12% of the Russian oil refining capacity is shut due to the Ukraine drone strikes. Until now, when you look at the crude oil prices, we are still 12 to 13% higher on the year. But for this week, it really seems like we are going to be ending the week on a flatter note. Having said that, it's going to be the U.S. inflation data that comes in tomorrow. So the street will be looking at action from that one. So while it's not just the crude oil prices which have declined, copper also is trading on a weaker side. It's trading at a 2-week lows in the markets there, as the street awaits further clarity on the smelter cuts in China. Also about concerns about China economic resilience is something that's bothering the markets, as is the hike in the LME inventories, where we have seen inventories gain up by nearly 20% in the current month itself, and that seems to be weighing onto the prices. There is some profit taking that you've seen in zinc as well. That one is trading at a 4-week lows. Aluminum prices declined 1.5% overnight also. So most of the metals in Asian markets have started slightly on a weaker note.
Thanks a lot, Manisha, for joining in. Important cues from the commodities market. But with that, it's a wrap on this edition of Power Breakfast. Bazaar Morning Call comes up next to set you up for this all-important expiry session. Thanks a lot for watching from myself and the team that put this show together. Thank you so much for watching.